Welcome back. You're watching I beg your pardon, Market
Cheryl, we have gone 2 hours past that, 3 hours past that. Let's not cut back to the day. We have seen a recovery post that as well.
I actually saw Aamar Singh's name there, so I realized that, oh, we have a techie, the new techie back on the show. And Aamar Singh, welcome to Market Fatafat. And let's talk about the first stock that you're going to talk about is Mindtech India. A stock that we've actually rarely covered. How are the charts looking for this one? How have they been looking all this while as well?
Yeah, a very good afternoon and thank you for having me on the show. So if you look at Mindtech, what we've seen is that the stock has, I would say, not almost doubled, but given spectacular returns since its correction. And since the second week of March, the stock has bounced back significantly from almost 170 levels. Currently, it's around 311 or so. And what we are seeing in this particular stock is that over the last few trading sessions, beginning from 28th to 27th of March, the volumes and delivery quantity has increased as compared to the previous average for the last, I would say, maybe 20 or 30 trading sessions. So that was also a breakout above a key resistance zone, which was earlier somewhere around the 190 level. And the stock then reached the 200 level. Currently, it's around 310. So the stock since 27th of March has delivered returns of more than 50%, which is phenomenal. And also the stock has broken out of its record highs, because earlier the high was somewhere in March of 22. That quarter, it had made a high of almost 300 levels. And from there, the stock had corrected. So again, it's reached that level. So that tells me that something is definitely interesting happening in the particular stock, and the stock is witnessing significant volumes also, what we've seen for the last few trading sessions. So that tells me that there's more upside to the stock. Sustaining over the 300 level mark, the stock has the potential to rally towards the 350, 360 mark in a short span of time.
Okay, let's move on. Talk about the dairy players and the dairy stocks. So Dodla Dairy is what we're picking out. We're picking out Heritage, Parag, as well as Hatsun Agro. Why are all these in focus? We have a brokerage note that's coming from Investec, initiating coverage on the dairy sector with a buy rating for Dodla Dairy, target price of 1,400 rupees per share. Overall, for Investec, the pecking order that's flowing through is Dodla, Heritage, then Parag, as well as Hatsun Agro. Now, for overall, they believe there's a lot of opportunity in this discretionary side, the dairy segment. That's a rising segment. They anticipate that, given that inflationary pressures are now reducing a bit, decreasing a bit, that will be something that will be driving the growth for all these companies. And obviously, private players is something that should be gaining from the shift that is coming towards the value-added products. So yes, more shift will come towards organized players. Dodla Dairy, like I mentioned, buy rating over there. For Hatsun Agro, it's actually a sell rating, target price of 700 rupees per share. Heritage Food is for 50 rupees and Parag Milk is a target price of 310 rupees. For Heritage, Parag as well as Dodla, it's a buy. While for Hatsun Agro, they've initiated coverage with a sell rating. Keeping an eye out on Dodla Dairy today, trading with gains of almost 1.5%.
All right, let's move on then. Let's talk about RK Forgings or Ramakrishna Forgings. That particular counter is upbeat in trade today. At one point in time, the stock saw an uptick of as much as 3%. Now it's moved past those levels, so 3.6% is where the stock is perched at right now. They bagged an order worth about 270 crore rupees. This in order to develop the bogie frames for 32 Vande Bharat train sets. On back of that particular order, prestigious order coming in for Vande Bharat, the stock is seeing good up move, about 3.6% in trade.
Okay, let's move on. Talk about Ambuja Cement. Ashesha, why have you picked out Ambuja Cement for us today? What's the news flow here?
Well, yes, it just announced an acquisition about an hour ago where the company said that it will be acquiring 1.5 MTPA grinding unit in Tuticorin, Tamil Nadu at an enterprise value of about 414 crores. This will be fully funded via internal accruals and will take Adani Group's total cement capacity to about 79 MTPA. The clinker will be fed through coastal movement from the Sanghipuram plant, ensuring cost-efficient operations for the company, and will also help the company in enhancing Ambuja's footprint across southern markets of Tamil Nadu and Kerala. Remember, over the weekend, the company also, Ambuja Cement rather, released a corporate presentation with respect to its plans going forward, where they said that they are targeting 140 MTPA capacity by FY28, which implies 16% CAGR over the next 7-year period. And Adani Cement also intends to increase its market share to 20% by FY28 versus 14% currently. The stock, of course, is in focus today on account of this acquisition and the long-term plans that the company has put forward. The stock, of course, is off the highest point, 0.1% higher as we speak.
Alright, so that is all about Ambuja Cement and why the stock is in focus. Let's talk about CSB Bank. Amar, how is this one looking on the charts to you? CSB Bank, given the fact that last 6 months the stock has seen an uptick of about 11% or so.
If you look at the stock, actually the stock was in for consolidation post its all-time highs, which the stock had witnessed in the last week of December from almost 420 levels. The stock corrected towards 330, and again the stock is back above the 400 mark. And what we are seeing is that if you look at the long-term trend, that is on the quarterly charts, on the monthly charts, that continues to be strong and positive. What we did witness on the intermediate term trend, that's a weekly chart, the stock bounced back from oversold territories, and now the stock is trying to regain the levels which it had tested in December of last year. Having said that, what we see on the charts in terms of the delivery quantity, in terms of the volumes also, that also has increased marginally over the last few trading sessions. So on 2nd of April, then again on 4th of April, and today also we are seeing significant volumes as compared to the average volumes which we see on regular days. So that tells me that the stock remains positive. However, if the stock needs to sustain above the 400 mark, so the stock sustaining at the 400 mark, it has the potential to first reach its all-time highs of 422. If that is taken out, then the stock could witness some sharp rally towards 440, 450 levels. So this is one stock one can definitely watch out at these kind of levels.
Surely keeping an eye out on that. Let's move on and talk about Warun Beverages. Why is Warun Beverages in focus today? We are keeping an eye out on this one because they have started the production at one of their plants when you look at it. And so we are keeping an eye out on Warun Beverages. Today the stock is a bit subdued though. They started the production of soft drinks at their Gorakhpur facility, and this is in Uttar Pradesh. Now, overall, when you're looking at it, what the company highlighted in their statement as well, that they will be making carbonated soft drinks, energy drinks, that is juices and value-added dairy products. That will be starting production at this facility. And on the back of that, Warun Beverages is something we're keeping an eye out on. They said that they would be investing around 1,100 crores for greenfield projects. So interesting to watch out for how Warun Beverages shapes up. Let's not forget all these summer stocks have been buzzing in trade. It's time everyone actually jumps into those cold drinks as well. That is keeping Warun Beverages.
Not an advisable idea. You jump into cold drink, you catch a cold just like the way I have caught one. That's the biggest mistake I do.
But sometimes cold fights cold, right? So
no,
maybe
not buying that argument. But let's move on. Let's talk about Godrej Agrovet, which is under pressure today. The stock actually saw a downtick of as much as 5.5% on an intraday basis. Now the stock has recovered from the day's lowest point. The company said that its unit has got an assessment order from the Commercial Taxes Department with a penalty of about 5.81 crore rupees. The company said that they're proposing to actually go ahead and challenge the order before the higher courts and authorities. If you look at the stock, it is on track it's actually on track for fourth consecutive day of losses. So that's Godrej Agrovet for you, that is sulking under pressure on back of this particular tax notice of 58 crore rupees plus 51 crore rupees interest plus 5.8 crore rupees penalty. So it's a hefty amount when you add all of that. Exactly. So that's why the stock is down about 5% as we, about 3% as we speak.
Okay, surely keeping an eye on that. Let's move on. Talk about Patanjali. Ashisha, this one came out with its Q4 updates. How is that looking like? You know, any commentary on the palm oil prices?
Absolutely. It came out with its operational updates and the stock is declining in trade, 1.6% lower in trade as we speak. First, they say that prices of edible oil in India during the quarter remained stable and rebounded from the low levels that we witnessed in the previous quarter. As far as operational data is concerned, revenue from edible oil segment showed modest growth on a year-on-year basis. It showed a growth of about single digit. In the March quarter, revenue for food and FMCG segment also continued to remain resilient, demonstrating high single-digit revenue growth and maintaining stable EBITDA margins as far as their food business is concerned. And sales of ghee and dry fruits remained steady, while sales of kesar and beverages registered strong growth on a sequential basis. So on account of rather muted set of operational data that the company has reported, the stock is declining in trade, 1.7% lower as we speak.
Alright, so that is all about Patanjali. Let's talk about Indian Hotels, Ankita, and what's exactly happening in that stock, and also why is it in news?
Focus today. In fact, it has come under a bit of a selling pressure right now. It is trading with a downtick of 1.2%. But UBS has come out with a note on Indian Hotels and they're maintaining a buy, and they've hiked the target price to 715 rupees per share from 500 rupees. Now, they feel that the operating and the financial leverage is likely to accelerate the earnings for this particular counter. They have numerous optionalities to accelerate revenues, profitability, which is aided by internal assets and large cash generations for the company. Well, the earnings upgrades and the embedded value of optionality should support the re-rating for this particular stock. And on the back of that, they're maintaining a buy, and they've also hiked the target price. But for now, Indian Hotels is trading under pressure with a cut of 1%.
Okay, keeping an eye out on Indian Hotels over there. But let's move on, talk about ONGC. Why is ONGC in focus today? The stock was passing away in trade. At one point of time, it was up as much as 6% right now, also holding on to those 6% gains at the day's highest point. We have a note that's come in from Jefferies. They've initiated coverage on ONGC, and buy rating is what they're saying. Target price of 390 rupees per share, which is almost a 45 to 49% uptick that we could say in terms of an upside that we are expecting there, that Jefferies is expecting there. Other than that, they believe that valuation doesn't capture the free cash flow upside that is there, and they believe that's why there's a huge potential for the stock to further run up. Overall, the stock was trading at a bit of a discount to the Nifty when you compare it to the long-term averages, and they believe there's improved profitability, predictability, and reforms in the gas segments is something that should support overall the company's growth, and that is why they're positive on this stock, and ONGC is passing away in trade today.
Alright, let's move on and let's talk about Gail, then Amar. Definitely this one is seeing a good uptick in trade today. There are a couple of factors. Before actually going on to that, you also have the power, what happened in the power sector as well. That move is impacting Gail. You also have what exactly is happening in geopolitical way as well that is impacting Gail today. But on the charts, do you think that the up move will sustain irrespective of what the news flow is?
Yeah, looking at Gail from a long-term perspective, I would say the momentum is definitely very strong. There's no doubt about it. The stock did witness some sort of profit booking in the first week of March from almost 196 levels to around 165. And then again, the stock is trading at record highs. So if you look at the stock and the recent high, all-time high was around 210 odd levels. So what we are seeing in this particular stock is that once this rally has started above the 184-85 mark, we've seen a significant build-up happening in terms of the delivery quantity and also the interest amongst the investors or traders at large in this particular counter. So overall, from a short-term perspective, also the stock remains strong and positive. For any further major up move, the stock needs to sustain over the 210-215 mark. Sustaining of that level, the stock has the potential for a 10 to 15% rally from those levels.
All right, let's shift focus then and let's put the spotlights on rice and the tea counters like KRBL, Jeshri Tree. They are all of them in focus today. They are seeing a sell-off actually on back of the concerns on Iran's unprecedented attack on Israel over the weekend, and this may draw the Middle East into a wider conflict. In fact, if you look at the shares of Kohinoor Foods, it fell as much as 8% on an intraday basis. You also have McLeod Russell that fell 3%. Goodrich Group also fell in trade today. KRBL saw a downtick of about 5%. Jeshri Tea saw a downtick of about 4.8% on an intraday basis. And Chaman Lal Sethia also saw a downtick of about 13%. No doubt most of these counters have recovered in trade today. One of the comments actually that came a short while ago from Iran, actually they said that they do not want to actually raise tensions in the Middle East. That could have contributed to a recovery coming in all of these counters. But Indian tea and rice exporters are worried that the Iran-Israel conflict could affect the outward shipment of the products. This is also something that has come out in the Economic Times as well, and the quantum of that loss also will be substantial for these rice exporters as well. So that's why all of these counters were under pressure. Now they're seeing good, smart recovery from the day's lowest point.
Okay, But let's talk about another stock that is, buzzing away in trade. Amar is Mangalam Cement. When you look at it, just last year it was around those 200 levels. Today it's at 861. 4 times in terms of the up move we've already seen in terms of a return. You're still expecting an upside there, or is it time that we start booking our profits?
If we look at the stock had made a high on 4th of March of around 800 levels, and from there the stock had corrected towards 600, 615, 617 levels. Then again the stock has taken off. So if you look at the stock from a longer term perspective, that is traditionally on the long term charts, as the monthly charts or the quarterly charts, the trend and momentum is very strong. What we however see on the weekly charts is that there has been a decline in momentum. So ideally, and some of the technical indicators do point towards overheating in this particular stock. The ideally any pullback should be used as a buying opportunity for the stock. The stock has now got very strong support coming around the 800-820 zone. Whereas on the upside, the stock sustaining above the current high. So somewhere around 840, 850 is the zone of resistance which the stock has taken out. Sustaining of these levels, then the stock has a potential to rally towards the 880, 890 levels. But yes, at the current levels, the risk-reward ratio, one will have to be slightly cautious on that. So a correction would be ideally a good time to enter the stock.
All right, that's the take coming in on Mangalam Cement. But let's talk about ISMT then, Ashesha, and why is this particular stock in focus?
So on the back of order wins, small company, we don't usually talk about it, but the stock is soaring in trade today. Off the highest point, but despite that, nearly 7% higher as we speak. This after the company informed the exchanges that they've won orders worth about 344 crores from ONGC for supply of several products. So on the back of this order win that has come through, the stock is gaining nearly 6.5 to 7% today. Remember, the stock has already run up a whole lot. So in the last 1 month, the stock is up 24%, and in the last 6 months, the stock is up nearly 37%. Today, of course, on the back of this 344 crore order, the stock is gaining 7%.
Let's move on and quickly talk about Chola Investment and Finance. Ankita, why is that one in focus today?
Well, yes, Chola Investment and Finance Company is in focus today on the back of the fact that they have issued 50,500 secured non-convertible securities, which is worth 505 crore rupees, with green shoe option of 500 crore rupees via private placement, and this will be for a tenure of 5 years at a coupon rate of 8.54%. And the back of that, Chola is going to be in focus today. In fact, right now it is trading with cuts of 0.7%. In fact, it saw a sharp knock in early trade today, but it has recovered from its day's lows and currently trading with cuts of 0.7%.
All right, let's move on then. Let's talk about NMDC then, Amar. And how is this one looking on the charts to you? You've seen all these metal counters on fire, literally. Now 50% uptick in the last 6 months. What's your take going ahead for NMDC?
So NMDC is, I would say, technically it's strong on the charts. So we are seeing that this particular stock has a potential to rally towards its recent highs, which the stock had made towards 250, 252 level. So that's a level to watch out for, where the stock would meet with some sort of resistance. On the long-term charts, the stock remains very strong, whereas on the intermediate-term trend, we are seeing some sort of consolidation in this particular stock. So one should ideally wait for the 250 to 60 zone to be breached and sustained above that level. Then we could witness the stock. Then we could witness a significant rally in the stock. Because if we go back in time, the stock in almost 13 years back, it used to trade around 400 levels. So the stock still has a long way to go if it sustains above the 250 to 60 level.
Okay, let's move on. Talk about Zomato. This one has not seen any stopping in the last 1 year in terms of an up move. But today we have a brokerage note. Okay, before we go to Zomato, let's talk about Zomato then. Zomato, this one is in focus today because we're seeing UBS that has raised the target price to 250 rupees per share from previous target price of 195. And overall, they're saying that quick commerce is something that is going to see a good growth. The margin potential is much more appreciated and underappreciated. So yes, we could see a better potential in terms of growth there. And overall, margins are estimated to be at 9%, is what their UBS is saying by FY29, 2x that of what consensus are saying, as well as in terms of the gross merchandise value also, that's also expected to be at $10.2 billion by FY29. This is for quick commerce, and that's the word coming in from UBS. Yesterday, the stock is a bit subdued but recovered comfortably from the day's lowest point, so let's keep an eye out on that.
All right, so that is Zomato for you. Let's talk about the power stocks, all of them in focus because the government has imposed a Section 11 of the Electricity Act on gas-based power plants with or without PPAs from 1st of May right up till the 30th of June. The tariffs for the plants with PPAs shall be determined by the appropriate commission, and the tariffs for the plants without PPAs will be determined by a committee on a mutually agreed basis. IFL had come up with a note and they said that this move should de-risk the grid's reliance on coal units to meet the peak demand. The plant load factors also can rise, thereby benefiting companies like Torrent Power, Gail, Petronet LNG as well as GSPL. They also said that every 1 million metric tons of incremental LNG imported, so you have Gail, Petronet LNG that may see a 5 to 10% EPS upgrade, while IEX also may also gain from higher volumes, exchange volumes. So that is the note coming in from IFL on all of these counters. So that's one of the reasons why you can see all of them in focus today.
Let's move on and talk about JB Chemical then, Amar. On the charts, what's JB Chemical now indicating? Where should we expect the target price to move from here on? What is it that you are keeping on your radar?
JB Chemicals, the stock had made a high, I would say in the second week of February, almost close to 1940 levels. And then the stock did correct towards the 1500 levels, and then again it's back to 1800 plus levels. So this is one stock one can definitely keep a watch on, because the stock has resumed its upward trajectory. And also what we are seeing is that over the last few trading sessions, that is on 9th of April and as recent as 12th of April, we've seen significant volumes and delivery quantity vis-a-vis the average over the last 20 to 30 trading sessions. So that tells me that there is more upside to the stock. But yes, the all-time high which the stock had made of 1940, that is going to act as a zone of resistance. So those who would be long, they should look at booking profits around those levels. However, having said that, the long-term trend remains very strong for the stock. So any pullback is a buying opportunity. So the stock is likely to consolidate between 1900, 1950 on the upside and around 1600, 1650 on the downside.
All right, so that is the take coming in on JB Chemicals. Shesha, let's talk about Bharat Electronics as well as Crompton. Why both of them are in focus?
Lack of block deals that took place today. Both these counters are in focus. For BEL, about 1.13 million shares changed hands via block deal. And for Crompton Greaves, in fact, Crompton Greaves is sitting with a cut of nearly 2.5% after that block deal that took place. 2.8 million shares changed hands. On both these counters are in focus on account of block deals that took place today.
Okay, couple of block deals happening there, and keeping an eye out on that. We'll wait out for who are the buyers and sellers of this, but keeping an eye out on BEL as well as Crompton. Let's move on and talk about HAL. Amar, HAL, obviously, we've seen these defense names see a very good run up. What is now that one should watch out for in terms of the charts for HAL? Are you expecting an upside? Last 3 months, 22% return, but before that also we've seen a strong, sharp rally already coming for defense names.
Yeah, so looking at HAL, what we are seeing is that, the stock is in a major secular bull rally. There's no doubt about it. If you look at the way the stock has rallied, that has been phenomenal, and also the correction has been very shallow. So in that sense, what it effectively tells me is that there is very strong inherent strength in the stock, and also the volumes. If we look at the type of volumes which the stock has been witnessing over the last, I would say, a couple of years, that tells me that any pullback is being used as a buying opportunity, and the stock is still not showing signs of, I would say, a trend change. From a long-term perspective, on the monthly chart, it's very strong. On the weekly charts, the trend momentum is there to stay. Daily charts also, we are seeing that the trend is strong. One of the technical indicators on the long-term charts clearly points towards overheating in the particular stock, but still that's not that could be a warning signal, but that's not a sign wherein it's telling that there's a trend change in the stock. So this is one stock one should definitely look at on any correction. It's a good buying opportunity. The levels to watch out for on the downside is 3300, 3400. That's a very strong support zone for the stock. The stock could witness some profit booking around the 3700, 3750 levels, because there it appears that we could witness some profit booking. Otherwise, on any pullback, this is a stock worth having in one's portfolio.
All right, with that, we actually actually come to the end of this edition of Market Fatafat. Thank you so much, Amar, as well as Vinay, for joining us on the show. Along with that, thank you so much, Ashesha and Ankita, for taking our viewers through all the stocks that are moving in trade today. With that, it's a goodbye for Vinny, myself, and the team that put the show together. But let's not forget about TCS, because that particular counter has seen a sharp knock from the day's highest point, 3% downtick coming in of, I beg your pardon, 3% from the day's high that TCS has lost right now. Let's hear what exactly the management had to say to us in that special interaction.
If you look at one, we are very pleased with getting back to our guiding beacon or touching it, and that's something which we have always believed in. And if you look at it has been structural. For the past 3 quarters, we have been having approximately 100 basis points plus minus improvement sequentially in each of the quarters. So yes, to that extent, it's a good thing. And we believe if the macro environment improves and growth comes back, growth being a bigger lever, it will help us accelerate this journey better. Else, we are quite happy with where we are exiting Q4 at.
Samir, let's understand the margin picture, 26%. How much of that is coming largely because of better client engagement, better billing rates? How much of that uptick is because of business? How much of that is because of productivity?
Okay, so let me give you the 100 basis points improvement which we had. This was in spite of headwinds of 90 basis points coming in from higher third-party expenses and also increased travel expenses. And this was offset by 190 basis points benefit, primarily coming out of bottoming out of our subcontractor cost and productivity and utilization gains.
So nothing has improved on the business front, can I say that?
So if you look at pricing is stable, so it is more disciplined execution and focus on operational rigor, which has delivered this margin.
Is growth back? That's a question I would like to throw at both Kriti and NGS. Who wants to take this simple question? Is growth back? Sab ye janna chahte.
See, the point is we've been looking at our TCV for the last 4 quarters. We've been reporting very impressive TCV. And we believe like with this TCV, the growth has to come back, but we don't know whether it will come in Q1 would be the quarter or Q2 would be the quarter. That call I don't want to make, but overall we believe FY25 would be a better year than FY24.
Better is a relative and an absolute word. How do I understand the meaning of the word better?
For me, it's better and the growth is better. Like and then the margin at least. See, we all at least hit our lower end of our guiding beacon of 26-28. If you're able to stay in that margin range and have a better growth than 24, I would call it a better year.
If you like this video, then like, share and subscribe to ET Now.